Hey everyone, and welcome back to Book Summary Podcast. Today we're going deep.
Deep.
Yeah, really deep into the Commitments of Traders Report.
You got it.
Or the COT report, as most people call it.
Right.
It's this weekly report
Oh, yeah.
that comes out from the Commodity Futures Trading Commission.
Mm-hmm.
And it gives us a peek behind the curtain, so to speak, of the futures market.
It does.
So if you're ready to kind of decode what the smart money's doing
exactly
and anticipate those market shifts, make sure you hit that like button and subscribe.
Oh, and subscribe.
So you don't miss any of our future deep dives.
Deep dives, that's right.
All right. So for those of you
Okay.
who are new to this whole COT report thing,
Right.
It basically just lays out, the positions of all the big players in various futures markets.
It sure does.
So everything from corn and oil to currencies and stock indexes.
Exactly. It's like a snapshot of who's betting on what.
Oh, wow.
And how those bets are changing over time. And that's when things get really interesting.
So the COT report tracks three main groups of traders.
That's right.
We've got the commercial hedgers.
Yep.
Who are often companies that are,
right.
directly involved with whatever the underlying commodity is. Then there are the large speculators.
Yep. Your
hedge funds.
Right.
Big-time trend followers. And lastly, we have everyone else kind of lumped together as small traders.
Exactly.
It's important to understand
it's super important.
the motivations of each group.
Yes.
Because they approach the market in such different ways.
Totally differently, yeah.
It's like a poker game.
It is.
Where you can see some of the other players' cards.
I like that analogy.
Okay, so let's start with
the
commercial hedgers.
Yeah.
These are the folks that often get called the smart money, right?
The smart money, that's right.
Exactly.
They're the ones with deep pockets. Direct knowledge of the underlying commodity. Think of them as the ultimate insiders.
Oh, good.
The grain merchants hedging against a price drop or airlines locking in their fuel costs.
Okay.
They're not really looking to speculate.
Okay.
They're mainly using these futures contracts to manage risks.
So it's more about protecting
Yeah.
their business than making a quick buck.
Exactly.
Okay, that makes sense.
Yeah.
Now, on the other side, you've got the large speculators.
The risk takers.
Yeah.
They're the hedge funds, the commodity trading advisors.
Okay.
The ones who live for volatility and big market swings.
Oh, so they're the ones
They are.
to bring the excitement,
Exactly.
add fuel to the fire.
That's right.
When a market starts to move,
You got it.
they're typically just following trends.
Following the trends.
Using all sorts of algorithms, trading programs, trying to capitalize on those big moves.
Exactly right.
So we've got our risk managers, we've got our risk takers.
Right.
Where do the small traders fit into all this?
Yeah, they're a bit of a wild card.
Oh.
The small traders category is pretty broad.
Okay.
It includes everyone from individual investors to smaller commercial entities that don't meet the reporting thresholds for the large categories.
Okay.
Their impact on the market is less predictable.
Right.
But that doesn't mean they're insignificant.
So it's like they just add this element of unpredictability to the game.
A little bit of a wild card.
You never quite know what they're going to do.
That's right.
That's what makes analyzing this COT report so fascinating.
It is.
Because it's like you're trying to decipher the moves of all these different players.
You got it.
With all these different motivations and strategies.
Exactly. And the real key is understanding those net positions.
Okay.
That's where the magic happens.
So right there.
Okay.
This is where I always get a little lost.
I understand.
Break it down for me.
Okay.
What exactly are net positions?
So a net position is simply the difference between the number of long contracts and short contracts held by a certain group of traders.
Right.
So a long contract is a bet that the price will go up.
Gotcha.
A short contract is a bet that the price will go down.
Okay, so if a group is heavily net long, that means they're
bullish.
They're very bullish.
On that market, exactly.
Okay, and conversely, a large net short position.
That indicates a bearish sentiment.
Okay, so it's almost like taking the temperature of the market.
You got it.
To see whether people are feeling hot or cold.
That's a great way to put it.
About a particular commodity.
Yeah, and here's the thing.
Okay.
It's not just about the absolute value of those net positions.
Right.
What's even more insightful is looking at how those positions are changing over time.
Oh.
Are they getting more bullish?
More bearish?
Okay.
How do those changes compare to historical patterns?
So that's where the real detective work.
That's where it gets interesting.
Comes in.
Yeah.
Looking for those clues in the way those positions are shifting.
You got it.
Now, I've heard people say that you should just follow the commercial hedgers.
Right.
Because they're the smart money.
Yeah.
Is that a good strategy?
Well, it's tempting to think so, right?
Yeah.
I mean, they have the inside knowledge,
right.
but blindly following any group, even the commercials, can be dangerous. The market's complex.
Yeah.
No single indicator, not even the COT report, tells the whole story.
So it's more nuanced than just mimicking what the smart money is doing.
You got it.
We need to kind of dig deeper.
We do.
Understand the context behind those moves.
Exactly.
But before we get into that,
I
have to ask about a group.
Yeah.
That always seems to stir up a bit of controversy.
That's right. The index traders.
The index traders, yeah.
These are the folks that manage those massive commodity index funds, right?
Exactly.
And for a long time, they were lumped in with the commercial hedgers.
That's right.
In the COT report.
Yes.
Which I imagine created a lot of confusion.
A lot of confusion.
Because index traders,
right?
They're not really hedging.
They're not.
Like traditional commercials are.
No.
Their buying and selling is driven by the flows in and out of those index funds.
That's right.
Which can sometimes distort the picture.
It can distort the overall picture.
It's like trying to read a map.
It is.
With smudged ink.
Exactly.
You're not quite sure what's real and what's just an artifact.
You got it.
Thankfully, the CFTC recognized this issue.
They did.
And started publishing a separate supplemental report just for commodity index traders.
Exactly.
So now we can get a much clearer picture.
Much clearer.
Of what they're up to.
Exactly.
Okay, so now that we've met the players, we understand the basics of net positions.
We do.
How do we actually use this information to make trading decisions?
Good question.
I'm guessing this is where the COT index comes in.
You're on the right track.
Okay.
The COT index is a great tool. It distills all that complex COT data into a simple, easy to understand percentage.
So instead of trying to decipher all those raw numbers,
that's right.
We can just glance at the COT index.
Exactly.
And get a quick read on the overall mood.
You got it.
Okay.
So think of it as a sentiment gauge that ranges from 0% to 100%.
Okay.
0% would represent maximum bearish sentiment,
Gotcha.
while 100% would indicate extreme bullishness.
Okay.
And the really cool thing is the COT index lets you compare sentiment across different markets.
And time frames.
Okay.
So you can see how the mood in gold is stacking up against the sentiment in oil.
Wow.
Or even the S&P 500.
That's really helpful for putting things into perspective.
It is.
But I'm assuming it's not just about whether the index is high or low.
Wow.
There must be specific patterns or signals we're looking for
exactly
to actually trigger trades.
Absolutely. And one of the most powerful signals to watch for is what we call a COT climax.
Oh, a COT climax.
This is when the COT index hits those extreme readings, either close to 0% or 100%.
Gotcha.
So basically, one particular group of traders is essentially all in on their bets.
So they've either piled into long positions because they're super bullish.
Exactly.
Or they've loaded up on short positions because they're extremely bearish.
That's the idea.
Okay.
And what's fascinating is these COT climaxes often signal potential turning points in the market.
Okay.
For example, a commercial buying climax, a reading above 90% can often indicate a market bottom.
So it's like the smart money.
The smart money.
Those commercial hedgers. They're scooping up bargains.
They are.
While everyone else is panicking.
Exactly.
That's pretty counterintuitive.
It is.
It really highlights the power of understanding this COT data.
Yes.
But of course, no indicator is perfect.
Right.
And COT signals, just like any other tool, can sometimes generate false signals. So it's not about blindly following any single signal, but rather using the COT report as part of a broader analytical framework.
Exactly.
Right, combining it with other fundamental and technical insights.
The COT report is like a secret weapon in your trading arsenal.
It can give you these valuable insights into the minds of the market's biggest players. But it's up to you to use those insights wisely.
Well said.
Thank you.
I'm already starting to see how this all comes together.
It's all coming together.
You know, we've got the players, the motivations,
there's the motivation,
net positions, the COT index,
yes,
even those fascinating COT climaxes.
Exactly.
But I am eager to dive even deeper into how we can actually apply all this knowledge to real-world trading scenarios.
Let's do it.
So before we move on, make sure you hit that like button.
Like and subscribe.
And subscribe so you don't miss the rest of this deep dive.
That's right. We'll be back in a flash.
We'll be back in a flash with part 2.
Part 2. Welcome back.
All right. So last time we were talking about those intriguing COT climaxes, those moments where the COT index hits those extreme levels, suggesting, potential shift in market direction. Can we maybe jump into a real-world example of how this played out?
Let's rewind to 2007.
Okay.
Remember the copper market?
The copper market.
Yeah. Copper prices had been on a tear for years.
Okay.
Fueled by strong global demand. Large speculators were heavily net long, piling into the market, convinced that prices would just keep skyrocketing.
Everyone was bullish on copper.
Oh, yeah. Classic speculative bubble territory.
Prices through the roof.
Yeah.
Speculators riding high.
Exactly what happened next.
Yeah, what happened?
Well, in the midst of all that euphoria, something interesting started to happen.
Okay.
Commercial hedgers, those copper producers and users, they started to quietly shift their positions. They began selling futures contracts, pushing their net position to an extreme short level.
Saying, hold on, this is
essentially saying this is getting out of hand.
Getting out of hand.
But did the market listen?
That's the question,
Well, at first, it seemed like the speculative frenzy would just power through. Copper prices briefly pushed even higher.
Oh, wow.
As if defying the warning signs from the commercials.
So the market was trying to call their bluff.
It was like a classic case of irrational exuberance.
Yeah.
But then almost as if a switch had flipped, the buying power dried up.
Okay.
Copper prices reversed course.
And
plummeted, erasing much of those speculative gains from the previous years.
That commercial selling climax.
Yes.
Foreshadowed a major market top.
That's right. It's a powerful example. Like how paying attention to those COT signals can give you a real edge.
Even when it seems like the market's telling a different story.
Exactly.
That copper story definitely drives home the point.
It does.
But before we get too carried away, I want to touch on something.
Yeah.
You mentioned earlier those data anomalies that can sometimes skew our analysis.
It's a great point. We need to remember that even the COT report, as powerful as it is, has its quirks.
So what kind of data anomalies?
Well, one common issue is related to changes in contract specifications. You see, the way futures contracts are structured can evolve over time. Sometimes the contract size changes or the delivery location is adjusted. And these seemingly small tweaks can create discrepancies in the historical data.
Yeah, trying to compare apples to oranges.
Exactly. We need to make sure we're analyzing consistent data points.
Another factor I'm
Yeah, and this one might surprise you.
Okay.
There have been instances, though rare, where the CFTC has had to go back and correct errors in previously published data.
So even though
it highlights the fact that no data source is completely infallible.
So we need to apply a healthy dose of skepticism.
Yes, always a good idea.
And cross-reference information whenever possible.
Absolutely.
Okay, so with all these potential data quirks. How can we make sure?
Well, one of the best safeguards is to combine the COT report with other forms of analysis. Think of it like building a case. You wouldn't convict someone based on a single piece of evidence, would you?
Definitely not.
So instead of relying solely on COT data, we can integrate it with fundamental analysis and technical analysis.
So break that down for me. How do those different approaches?
Let's say your fundamental analysis suggests that global demand for a certain commodity is likely to surge in the coming months, potentially driving prices higher.
So we have a solid...
That gives you a foundational reason to believe that the market might be poised for an uptrend.
What role does the COT report play?
Well, before jumping headfirst into a long position, you could check the COT report to see if it supports your thesis. If you see that commercial hedgers are starting to build a net long position
Okay.
in that market.
Gotcha.
It adds weight to your fundamental outlook.
So it's like having those smart money insiders.
Exactly.
Backing up your hunch.
Exactly. It's a form of validation.
Okay.
Adding an extra layer of confidence.
All right, so we're not just blindly following COT signals, but rather using them to strengthen our convictions.
Exactly. The COT report acts as a powerful reality check.
Okay.
Helping us to align our trades with the actions of those who are often the most informed.
I'm starting to see the real value here.
Good.
It's not about finding a magic formula.
It's not.
It's about using the COT report to enhance our understanding
exactly.
of the market's underlying dynamics.
And remember, this filtering process can work in both directions.
Okay.
It can help you avoid bad trades, as well as identify promising opportunities.
So not only can we use it to confirm our bullish ideas, but we can also use it to avoid those bearish traps.
Exactly. Can I give you an example?
Yeah, sure.
Let's say you've been watching the gold market.
Okay.
And your technical analysis reveals a potential double top pattern forming on the price chart.
Okay, so we've got a bearish signal.
This classic pattern often signals a potential trend reversal, suggesting that the long bull run in gold might be coming to an end.
Okay, so we have a bearish signal from our technical analysis.
Before you jump into a short position, you might want to check the COT report to see if it supports your bearish outlook.
Okay.
If you see that large speculators are starting to reduce their net long positions, or even flipping to a net short position, it would add weight to your technical analysis.
So it's like those trend-following speculators.
Exactly.
Confirming your technical signal.
They are. It's about using the COT report to help you see the market from multiple perspectives.
Gotcha.
Increasing your odds of success.
We're using the COT report as a strategic weapon.
I couldn't agree more. But remember, the COT report is just one tool in your trading toolkit.
Right.
It's essential to combine it with sound fundamental and technical analysis
to create a truly robust trading strategy.
You got it.
We need to take a quick break.
Okay.
Don't go anywhere. We'll be right back.
Sounds good.
To wrap things up.
Okay.
Welcome back to the final part of our deep dive into the Commitments of Traders report.
It's been a great deep dive.
We've covered so much ground, from understanding the motivations of those different trader groups to identifying those crucial COT climaxes.
Absolutely.
But now I'm eager to kind of wrap things up and really solidify those COT skills so we can put them into practice.
I'm with you. We've laid a strong foundation, explored some fascinating real-world examples.
Right.
Now it's time to bring it all together.
Yes.
And see how we can integrate the COT report into a comprehensive trading strategy.
So how do we actually weave those different strands of analysis, the fundamental, the technical, and the COT data into a cohesive approach?
Well, one powerful strategy is to use the COT report as a filter for your trading ideas.
Okay.
So imagine you've identified a potential trading opportunity based on your fundamental analysis.
Okay.
Let's say you've been following the soybean market.
Okay.
And you believe that a combination of weather patterns and growing demand from China could lead to a supply shortage, pushing prices higher.
So we have a solid fundamental reason to believe that soybeans might be a good buy.
That's right. Where does the COT report fit into this? Well, before you hit that buy button, you could consult the COT report to see if it confirms your bullish outlook.
Gotcha.
If you see that commercial hedgers, those soybean producers and users, are starting to build a net long position, it would reinforce your fundamental thesis.
So it's like having those smart money insiders giving you a thumbs up.
A thumbs up.
On your trade idea.
Yes. It's a form of validation.
Okay.
Adding an extra layer of confidence.
So we're not just blindly following COT signals.
No.
We're using them to strengthen our convictions.
Exactly.
And filter out weaker trading ideas.
The COT report acts as a powerful reality check.
Okay.
Helping us to align our trades with the actions of those in the know.
I'm starting to see the real value here.
Good.
It's not about finding a magic formula.
It's not.
It's about using the COT report to enhance our understanding of the market's underlying dynamics.
And this filtering process can work in both directions.
Okay.
It can help you avoid bad trades, as well as identify promising opportunities.
So not only can we use it to confirm our bullish ideas, but we can also use it to avoid those bearish traps.
Exactly. Give me an example.
Yeah.
Okay. Let's say you've been watching the gold market.
Okay, gold.
And your technical analysis reveals a potential double top pattern forming on the price chart.
Okay, so we've got a bearish signal.
This classic pattern often signals a potential trend reversal.
Okay.
Suggesting that the long bull run in gold might be coming to an end.
Right.
Now, before you jump into a short position, you might want to check the COT report to see if it supports your bearish outlook.
Really?
If you see that large speculators are starting to reduce their net long positions, or even flipping to a net short position, it would add weight to your technical analysis.
So it's like those trend-following speculators are confirming your technical signal.
They are. It's about using the COT report to help you see the market from multiple perspectives, increasing your odds of success.
We're using the COT report as a strategic weapon.
I couldn't agree more.
To gain an edge.
But remember, the COT report is just one tool in your trading toolkit.
Right.
Combine it with sound, fundamental, and technical analysis
to create a truly robust trading strategy.
Got it.
Absolutely. We've explored the ins and outs of the COT report.
We have.
From understanding those key players to identifying those powerful signals, and even navigating those tricky data anomalies.
Absolutely.
We've also seen how the COT report can be integrated with other forms of analysis to create a more comprehensive and insightful trading approach.
I think we've given everyone a lot to think about.
I hope everyone listening feels empowered to start using the COT report in their own trading.
It's a valuable resource for anyone who wants to understand the futures market.
And make more informed trading decisions.
Exactly.
I couldn't agree more. And that's a wrap.
That's a wrap.
For today's deep dive.
On the COT report.
Don't forget to hit that like button.
And subscribe.
And subscribe to Book Summary Podcast.
For more deep dives.
For more insightful explorations of the financial world.
See you next time.
Until next time, happy trading.